Hey, all you sexy people out there. Hope you're having a great week. It's been crazy, 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 right? Some of our best days in the last 80 years and some really lousy days too. And I don't think we're out of the woods yet. We're in a red market and we have been for a week. And it's been a long slog on our primary trend since I think March 4th. We've been in a red, downward trending market. And I'll show you what I'm talking about. But I don't know when this is going to end. Maybe it ends tomorrow. Sure doesn't look like it to me, the way I'm reading things, but let's see if you agree. So let me pull up what I got here. Let's start going into some of this stuff. Let me get to the right page on this. Okay, so you could see this was last week's chart. This is this week's chart. 4 red lights. You could see we went March 4th, we went primary trend down on that first red light, and we have 3 other red lights going down right now. So we are in a slog. That was on the New York Stock Exchange, that was like at 20,000, just about 20,000, 19.9. And look where we are now. We're at 17.8. Doesn't seem like a lot, but boy, it's felt like a lot. Here's why. So everything is kind of rolling over. The NASDAQ, you can see that I drew this line there. That's because we have a death cross. Death cross basically portends that there's still a lot of selling to come. And the street basically recognizes that as a sell signal. Not that we haven't had sell signals all the way. And by the way, this is interesting here. See this gap right here at 17,238, roughly in that area? We came up and filled that gap almost to the penny just because gaps get filled, right? And so now we're trying to gap down to the other side, not gap down, but go down the other side. And we could be making what I call a dreaded H pattern. So let me show you what that pattern is. If you don't know about it, if you've been watching this channel at all, you know that I talk about these dreaded H patterns, right? And there's one, and when it hits that bottom of that U right there, it goes down. And now look, if we get more of these days on the way down, we're going to get another dreaded H pattern. Quite interesting. I don't know if that's going to happen. There sure has been a lot of selling. We're off 20%, but holy moly, man. I don't want to see it keep going down, and it could. There's a lot of selling. Look at the volume here. Crazy volume. All right. Now they all look the same. Death cross, gap down, fill. This one didn't quite fill right there. High volume, a lot of sellers. This thing is not good. All right, not good. All right, Dow Jones, same thing. Not quite a death cross, not there yet, but it's coming. And I don't think anything can stop it. I mean, unless we get this crazy up, which this was the crazy up that we had on Wednesday. We need a lot of work. There's too much selling going on for this market to go up at this point. At some point, it will bottom and the people give up. It's called capitulation, but I do not think we're anything near capitulation. I may show you in a minute why I'm saying that. The New York Stock Exchange composite, in fact, I will show you because I think it's really cool. Looks the same, just a lot deeper. Okay, this is way away. There's going to be a death cross coming. This is way away from the 200-day moving average at that price. Way away, right? So a lot of work that needs to be done. A lot of damage has been done in this market. Look at the panic index. It's up in the 40s and 50s versus, over the last year, it's been all down here. Everything's been really quiet. All of a sudden, boom, people are going crazy. People are panicking. What's going on with my 401k? Oh my God, right? Well, there's been some damage. Now I want to show you this chart. So this is really cool. What I'm trying to do is superimpose this chart onto the 2008 chart. And I think I've done a decent job, but you might have to squint to make it work. So this is today's, and you can see that today's has this little red line on it showing you the death cross, right? So that's today's. But I also went back to 2008, and I've kind of got one superimposed along the other, right? So you could see they're parallel. Look at this. They kind of come down together, and they come down, and they go up. Look at that. It's almost the same. The only thing that's not really the same is this W and this minor W, right? But that's still in direction. It's kind of the same. So if you go direction up, direction down, direction up, down, up, down, up, down. It can't make, notice that it can't make any higher highs at this point. It's just high with a lower high and a lower high and a lower high and probably a lower high here. I don't know. Lower lows all the way down. Look at that, right? You see it? So this is, this is the clear view of what it was like in 2000. It looks so similar to right now. This is their death cross back in 2008. Do I know if it's going to continue? I don't know. But, past doesn't repeat itself, but it rhymes or whatever they say. All right. So, and then this is what happened after that. We had a little bit of an uptick. Oops, sorry. We had a little bit of an uptick, and then we couldn't hold the 200-day moving average. Every time it hit the 200-day, boom, it bounced right back down. Boom. It couldn't even get a golden cross for like 2 years, for at least another year till March 9th, okay, of 2009. So I don't know. I think that's pretty uncanny. I think we're in a little bit of trouble. Anyway, current environment interpretation. If you are on my, subscriber list, you know that I talked about this last week. So if you're not, subscribe to my free newsletter. It's called Subscriber or Insider Tips. It don't cost nothing, and I give you the stuff that you're getting. Plus, I give you other bonus videos every time, and I give you interpretations of the market. Why not? It's like just information. You listen to Kramer, you might as well listen to this bald guy. I got just as valid an opinion as his, maybe better. I don't know. Anyway, current environment, recession or growth slowdown expected. Rate cuts are coming. I think that's what the Trump administration is bucking for, and they're trying to hammer that yield on the 10-year Treasury to get to that level so that we can get a lowering of the rates. We have a safe haven rotation. Things are moving to safety, which means diapers and soap and shampoo and booze and cigarettes, all safe, recession-free things. Government policy shift, just like we had in 2008 when all the banks were going bankrupt and the government was bailing them out as a policy and saving everybody and then giving them bonuses because, they paid them off or whatever crap they got going on in the government. Here are some key moves that you can make. Shift to defensive sectors like utilities, healthcare, staples like soap, like I was mentioning, and tobacco. More exposure to hard assets, things like gold and silver, real estate, Bitcoin, and move to cash or short-term bonds. Not too long because I don't care what they say, we still have inflation, even though it's supposedly coming down. And then covered calls, which is what we do here, at the cash flow machine, because that generates income while things are going down or staying the same sideways. And it might be a year before this market recovers. Might be 2 days. I don't know. But it's probably going to be a little bit longer cycle than we thought, just like I showed you in that 2008 to 2025 comparison. So, keep an eye on that. All right, some quick going through some stocks here. All right. We've got MicroStrategy, or strategy as it's called now, I guess. You could see that, we were at 543. We hit a bottom of around 231. That's a 300-point move, right? Unless I'm missing something. My math said $300 on the way down. We had a little bounce here in March. We've had our bounces, right? We had a little bounce from 285 to 404. Hopefully we're going to get the same kind of a thing here. I don't know. What I see happening here on MicroStrategy is two things shaping up, okay? Two conflicting things. So you see the top of that triangle down, then the bottom of the triangle is a flat base here, right? If we get a break down below this flat base here, we're going to go lower, okay? And that's at the 200-day moving average, and a lot of stuff happens there. So we need to hold this spot. We're doing a pretty good job of it here at 284 right now. The other thing that could happen is we could get this run up to 343, right? If we can get that run up to 343, that puts this 404 back in play. And look, this thing has bounced off the 200-day moving average several times in the last few weeks. So to me, it feels like that's the direction this thing wants to move. Okay, it's Bitcoin sensitive. So if Bitcoin goes up, great. If Bitcoin goes down, this goes down too. But generally, like I feel, not that I feel means anything, that to me feels like the way that MicroStrategy may want to go. So you may want to play it slightly to the upside. Of course, I sell covered calls against it, which means I get a bunch of juice every week, which is my income, and that helps me offset my downside. So I am probably selling slightly out of the money this week. I'll be making a video here in a couple minutes about what I'm going to do this week. But I think it wants to go back up about 50-day moving average, which puts 343.59 in play. All right. Hope that makes sense. Okay, let's go to the next one. iShares is really the same thing. It looks like almost the same chart. The Bitcoin Trust, IBIT, bounced off the 200. Here it's just a cheaper version of MicroStrategy with maybe a little less volatility, but it's kind of the same thing. All right, Apple. Apple to me looks totally different, right? This looks like a dog with fleas to me. We have a gap down here. We have a gap down here. We didn't quite fill that gap there. looks like to me, are going to bounce between this $200 price and this $170 low for a while. That's what it looks like to me. This stock is breaking down. We got a death cross here. Like, I don't see a world without Apple in 5 years. But I also don't see like a growth story here either to make all of this come back up and go that way. Not yet. I think we have to get through all the selling and the Warren Buffett's going to cash and the tech sector's like imploding. We have to get through that before we can get any kind of that, right? So that's how I see Apple. Nvidia kind of looks the same to me. Death cross. I've been saying for a long time this stock topped out here and it's been now rolling down for quite a while. It's under $110. It breached under $90, I think, last week. So I think it needs a lot of work to get all the way back up here. And it's got some selling volume, all the way down, right? These are periods where there was a lot of selling volume and gaps down. Like, technology is not in a good position right now, okay? For the reasons I just mentioned. Tesla, it's a technology stock, whether we like it or not. It looks pretty similar. It's going death cross today, and it's under the 200. It's under the 50. It's under all the moving averages that matter. It's got a dreaded H pattern right there. This thing has a high probability of going back down and testing that 217.02. Okay, and if that happens, it puts these crazy 182s and 136s or 138s in play, and I don't want to see that happen. But right now there's a lot of negative fundamental stuff against it, and the chart does not look good on Tesla. I wouldn't be reaching in and trying to find the bottom here on Tesla right now. There is Nvidia again. All right, Microsoft, same thing. It's a technology story. It's under the 50, under the 200. We had our death cross. See what happens when those death crosses happen? That happened right here around 430, 420, whatever it was. And now we're under 400, right? So you've got to pay attention to some of these moving averages. I know it's voodoo and watching charts is studying the past and you can't predict the future, but I don't know. I've been doing this a long time and there are patterns that jump out at me, and patterns, they're mostly accurate. I don't know if the stock is going down. I just think that the probabilities of these patterns coming to fruition go down. Look at this death cross this week right there. And you can see this stock, first of all, I don't know why anybody wants to advertise on Google anymore, because people are starting to move to ChatGPT and other AI that give you the answer without having to go to a website, right? It's like when you ask Siri, "Hey Siri, tell me the answer." Like Apple had the game won 5 or 6 or 7 years ago when they created Siri. And they haven't moved. Like, I don't know if you have an iPhone, but they haven't moved forward at all, right? I ask Siri, "Hey Siri, tell me the answer to this thing." Here's what I found on the web. And then they make you read a website. You ask that to my ChatGPT. I go, "Hey, ChatGPT, give me the answer to this." She goes, "Here's the answers and here's why. And did that answer suffice? And would you like me to give you a PDF on it?" Like, come on, that's where search is going. And Alphabet's giving away all these search things for free, hoping to get you hooked, but everybody else is copying them. I don't know why anybody would buy this stock. I wouldn't. And I certainly don't think you should buy it here. This thing is a dog. That's what I think. A little opinionated today. Meta platforms also not performing great, but better than the other ones. At least if there's no death cross right now. That's quite a move though. 740 down to 500. That's a 33% loss if you had it up here. That's pretty hefty. Nobody wants to sit through that. So you can see technology and social media, all these other ones that are tech-based are in trouble. Who knows when they'll recover, but there's a lot better sectors out there right now. Is this good? You want me to keep going? Okay, I'll keep going. All right, Amazon, another one. But Amazon's, I don't know, it just doesn't look as bad to me. It's got a death cross coming up here. It's under the 200-day moving average. I don't know. I kind of, maybe I just use Amazon a lot and I kind of think that it's okay. But I think let me see, it's got a 40-point down, 45-point down, 206. I mean, it looks like a dreaded H could happen here. But we're a long way from all these little bars coming all the way down here. If it happens, I don't think the dreaded H is that much farther down. I think it's got a move of maybe probably down to like right there if it goes down to that. Right now, it doesn't look like it's going there, especially if we get a decent market to give us a dead cat bounce or something. but I wanted to show you that. I've got some negative stuff that you can see on YouTube and on my, right here if you're on my Insider Tips newsletter. But I've been playing DR Horton to the downside, and look at it. Um, it is spot on. It's just hugging that 200-day moving average all the way down. It can't get out of its own way. Housing is in trouble because interest rates are not coming down. Housing is in trouble because we're overbuilt. Whatever the reasons you think, this sector is out of play. So this is a leader in the sector. Best Buy, why would why would you want to own a retailer that sells Chinese products when Chinese products are going to get priced higher, so people are going to spend less money? And you can see that there's a gap down there, a gap down there. I'm short this stock. I'm using what I call a juicy put strategy. It's coming down fairly quickly, and it's been a good position for me. The last one is JD. It's a Chinese retailer, kind of like their Amazon, and you could see a big gap down there. I'm short this stock. I think there's a lot more pain to come on this company. It's right around flirting with the 200-day moving average. It looks to me like it's going to go lower, lose its relative strength. I think 25, 24 is definitely in play here. It's probably something right around here of where it wants to go. So it's got a good 10 points to go to the downside, which is another 33%. And if they delist these Chinese stocks like they're talking about doing, man, I'm not saying go out and load up, because they probably won't delist Chinese stocks. It's not the first time we've heard that rumor, but you gotta at least listen to that point. Okay, you know what? I'm going to give you a couple things that I just gave to my mastermind group, so you're kind of on the inside. These are the worst performing sectors out there, right? 32% of a stock's performance comes from the performance of its sector. So retail, office supplies, nobody goes to Office Depot anymore. This one's surprising to me. Oil and gas drilling. Why has it been doing so poorly this year? 196 out of 197. Like, I thought this was a drill baby drill administration. But on the other side, I know they're getting rid of solar. That makes sense. I just don't understand why that one is performing poorly. And maybe it's getting ready to shift. I don't know. I can't predict the bottom. And if I'd have said the same thing 6 months ago, I wouldn't have been able to predict the bottom then either. So don't listen to me. Stocks like Iron Mountain, document management getting hammered. Technology is getting hammered. So are the semiconductors, computer stuff, shoes, Rolexes. By the way, if you're a Rolex collector, you are in deep trouble right now, because that sector is getting hammered. Transportation is going down. So you see the concept here, right? 32% of a stock's performance comes from the performance of its industry group and sector. The best ones right now, so if you're getting your buying list ready, look at these great sectors. We got mining, we got medical, we got tobacco. Nobody's getting rid of their iPhone in a recession. We're going to sit around and watch Netflix while we're on our phones, smoking cigarettes, and then we're going to go to the doctor and pay him with gold. What do you think? I think I'm going to take that one nationwide. So that's, those are the top sectors. So if you're going to be in anything, like, get ready in those. All right, I'll leave it there. Bottom line, bad market. If you're in cash and going to the spa and playing golf, like, you're in way better position than people that are trying to make money on the upside in this market. If you're selling calls and you're selling them in the money, like we teach, awesome, because you're actually making money on the way down, at least protecting yourself. But anyway, there's a lot more important things than money, although that's what I talk about here. So seems like it's not. But we've got a holiday coming up. I think next week we have Easter. So I hope you're getting ready to have some wonderful holiday plans. Thanks for sticking around, watching, tuning in. If you haven't subscribed, please do so. If you want to share it with somebody that you think could benefit, awesome. If you've stuck this thing out, this is like a record long market pulse. God bless you, and have a great weekend. And I'll see you on next week's market pulse. Take care.